And perhaps if Miromiro, you could start with an opening karakia for us.
Absolutely. Te ino e tātou. Nau mai te wairua papu haka uhia ki roto ki o mātou ngā kau te kāpura o tō aroha me tō māramatanga kia kahai mātou ki te haka krori e tu noa ki runga i te matua te whenua mātua ki mahi ukirito. Āmene. There was something about having some extra Holy Spirit in our lives to have a good meeting.
Thank you. And some of you are sitting alongside McNally.
Sorry, did I just add an extra cut of you?
Thank you, everyone. I've had no notices of apologies or declarations of interest to date. Are there any apologies or declarations to be raised? Had no notices of deputations. There, none to be raised. Thank you. Before we move to the confirmation of the previous minutes, just to give notice to everyone that we're going to change the order, the batting order here a bit, and the Far North item 5.6 Far North Holdings quarterly report, we're going to move forward into the meeting to allow Andy and his team to get off to another meeting there. So that'll be a small change. I'll perhaps just ask Benny, your team there, would you like us to move the item 5.3 and straight behind that?
That'll be great if we can do that, Graham. We've got a couple of these to attend to as well.
Excellent. So we'll have those changes. So the order will be 5.6, 5.3, then 5.1 moving through the remaining items, just to be clear. We have the next item is confirmation of the previous minutes. And we've got those have been circulated in the agenda pack. They commence on page 10. Firstly, just doing a page turn from the items of corrections. Page 10 in the agenda pack, that's page 1 of the minutes. Any comments? Page 2 of the minutes, page 11 of the agenda. I've raised a couple of small typos, namely my name spelling. I understand that those have been addressed. Any other points? Page 3 or 12, depending which numbers you're looking at. Page 4 or 13. And finally, page 5/14. There are no comments, but I ask someone to move the adoption of those minutes, and the resolution for this is that the Miromiro Assurance Risk Finance Committee confirmed the minutes of the extraordinary meeting held on 28 February 2024 as true and correct. Happy to move, John. Second, and thank you very much. All those in favour? Against, if any? Carried. Moving through into the main agenda items, paper 5.6 Far North Holdings. Just ask Andy to perhaps lead us through the paper and any comments as we find the start of the paper, which is on page 85 of the agenda pack.
I'll pass to Lisa. For those who don't know Lisa, she's our new finance director, so she'll lead you through that forward.
Thank you. So I'll take the papers largely as read, if that's okay, and just provide a bit of an overview, and then Andy will obviously chip in, and then we'll take questions if that's okay, Mr. Chair. So first of all, I guess overall in terms of the finances, we are on track to deliver our SOI target of $1 million profit for the year. And I guess overall performance has been going well, and we expect to achieve all of the SOI or other SOI targets as well. If I can just take you to the statement of financial performance, which is in the paper, and unfortunately I don't know your page numbers, so
Page 94.
Page 94, thank you. So So overall, we're looking at a profit year to date for the 3 quarters to March of 864,000, which is ahead of our budget. And then on top of that, we had a significant gain on sale of our High Maritime building to add on to that. So the full year to date gives us a 3.5 million profit so far. If I just touch on each of our operating segments, because we have had some differences in the performance of those to lead to our overall good performance. The property, the maritime area is performing well year to date. We've had, as you know, we've had a great summer season, and that has contributed to a good result, a really good result in cruise ship performance. We've had 88 ships dock for the year to the end of March, with few cancellations because of the weather, the reason. So that's been really, really great. And the summer's contributed well to the rest of that area as well, sales and berthage and what have you. So that's going well. The property division's also been performing well. We are seeing some challenges with filling some of our vacancies. So they are taking a little bit longer than we had hoped, but that is overall continuing pretty well as well. In terms of the Narfa Park, we have the corrections facility has now come into play at the end of March, so we're now getting the rental from that. That was a little bit later than we had hoped, so that has had a bit of a hit on our result compared to budget, but that is now tracking along well. Housing is pretty much aligned with where we had expected. So we have had the RSA project will be completing in later this month as planned. So that will kick in for the rest of the year as well. What else have we got? Share of associates. So the last, I guess, where we have had a little bit of a challenge within our result is within our share of associates on the berry fruit investment that we have had. They have had some operating difficulties, which has seen us recognise a bit of a loss on that year to date, and that is likely to continue for the rest of the year, although action has been taken to pull that back. So overall, in summary, I think we are having a good year to the end of March, and as I say, we do April and May is continuing to look strong as well. So we do expect to achieve our SOO result. Onto the balance sheet position. I think that's pretty much taken as read. The only thing I would really like to highlight in there is our borrowing position. You probably have noticed that we have quite a number of our borrowings in the current portion, so we'll be repayable within the next year rather than being due. That's deliberate at this stage because we are working with council to look at if we can transfer our borrowings to the LGFA funding, which would see us have significant interest savings going forward. So we're still working through that process. We expect to have that finalised in the next couple of months. At that stage, we will reset the borrowings so that they aren't all coming due within the 12 months. That's really the key thing on the financials. Do you want to add anything on the projects?
I think you probably summed up the projects and the financials in terms of what you said, corrections is completed. It's good to see that actually operational. It's a significant statement for corrections themselves in terms of how they address their perception and also what they do in terms of the reintegration and mates in terms of full-time training. So that's got a major social side to that. And obviously to Koe in terms of housing, community housing, opening up the 1, 2 and 3 bedroom units that will be occupied at the end of this month is a huge step forward. The biggest community housing projects in New Zealand. So to achieve that partnership with Food was quite significant in terms of our ongoing relationship with Hard. It set a bit of a precedent as to what we can do going forward across the district. So no, some very positive steps and quite a significant pipeline of projects in the office.
Any questions? Kelly?
Thanks, Graham.
Thank you for that. In that borrowings table, I think it's, if I read that correct, is 61 million. Are you able to just give us an overview of what that, you know, 42, 43 million of it is attributed to? Especially for those that will go back and listen to this, public are very interested in why Whānau Holdings has so much borrowings.
I mean, the borrowings relate to obviously historic projects as well. So, you know, our borrowing capacity relates, you know, if you go back a bit, stage 2 of the Marina started with probably one of our first really significant levels of borrowing. But then we've got borrowings relating to, for example, again, quite a significant investment in housing, our Innovation Enterprise Park, huge investment there. When you look at the education and training facilities for region and Kenya, the Innovation Enterprise building itself, and corrections. So, you know, some major employment and social developments there and economic outcomes that's been through development for commercial return to FHL. So those are the 3 biggest projects, if you want to put them in context.
Okay. And am I missing something in the report, Graham, to show me a return on investment for that?
I didn't see it mentioned in the report,
So-
but it's just doing a quick calculation that you're looking at about 3.5 to 4 million return on close to $200 million worth of assets. So that's 2.something% over the portfolio. But some of that is strategic assets where we might and getting better visibility between what are commercial returns. Because on the face of it, for a company that's doing developments, this appears to be undercooked, but there are some good reasons for that.
There's definitely
It's getting
social
visibility,
benefits.
getting visibility
Yeah.
through the social holdings that are good for the community, and we're protecting for the community versus those where we're actually trying to develop a return. I think would be a worthwhile split down, and that may need some more clarity within the reporting and the understanding between the shareholder and the company as to what the expectations are, and putting some lines around that would be my comment, because I also had highlighted my comments towards the end exactly the same point, and then with all the question marks against it as to why not getting the cut through, in my point of view as a reader of the accounts. And at the end of the day, also, we may need to think about how do we communicate this in your published accounts at year end so that the community can understand the rationale for the holding of that.
So, Chair, I agree on that. It's an item that we're actually working through. We haven't done a cut anyway, but to give everybody an overview. So if you take out, you know, we've got, as you said, a significant number of strategic assets with a nominal return. When you look at the airport, when you look at all the wharf structures, you look at the, you know, for example, the PGF grant money, the innovation park, infrastructure, all of that obviously has a nominal to nil return. So a significant amount of capital, but very little return to it. If you look at the investments we obviously undertake, they have to have a commercial return, otherwise we can't secure bank funding. So any of the developments that we've done over the past 8 to 9 years, you're looking at an 8% return plus, whether that's in housing, whether it's in the innovation part, whether it relates to the marina. So all of those have a commercial return to those. So I think what we'll do is a clearer breakdown for councillors. So when they're talking to the community, you can understand the rationale, as you can see, between the commercial return where we're investing and the social, economic and strategic assets, which we carry quite a lot of, which obviously do not have a commercial return attached to those. And those obviously drop the overall return to us. The other comment that I make is most property and development companies in a high interest environment do not pay much of a dividend. When we're carrying, you know, 8.5% interest, then straight away, you know, if you've got an 8.5% return, you're not making any money because you're just paying the interest bill. So you also need to always factor that into account as well.
Thank you. Any other comments? Councillor Bishop.
And then Councillor Corder. Just this is key risk, since we're talking Rotate, and I think I might have asked this question before. You listed them on page 7. But there, and I think, and looking at what you identified, I think you're in terms of one of the key lists, especially around the governance and change government policies and various things. But just, are there anything that needs to be highlighted that you're aware of? In other words, are you comfortable with the level of risk? Are you comfortable, and also, from our point of view, there are some, risk as well. Are you anything you need to do?
I think we've obviously highlighted the key risks there, and I think those were also relayed to the government meeting as well. We have very strong internal risk review conducted on bottom up and the top down. So those have recently all been reviewed, all going back to the board as well, or the subsidiaries. If those change at all, we'll let you know. There's nothing that is of any significance over and across those that we wish to raise at this stage.
Thank you.
Cool.
Thank you. I'm trying to get my notes up, but my laptop is not playing ball, so I'm going to have to wing it a bit. I did speak to you this morning, Mr. Chair, about my concern with using revaluations as a measure to grow shareholder funds. And I'm uncomfortable with that. The use of fair value measurement for financial reporting presents significant challenges requiring judgment and interpretation. It's not a static discipline. Markets change. And as a result, we must be very careful we don't become complacent about the methodology for measuring fair value. So when I read in here on the statement of intent, financial year 24 key targets, which is on page 91 of the printed agenda, the objective is to create value for ratepayers by increasing shareholder funds. And the target is to grow shareholder funds by $10 million. And the comment is the uplift in year-end valuations are expected to support this target. But equally, next year we could have another global financial crisis and valuations go into free fall, and suddenly we have not realised any uplift in shareholder funds. So I just wanted to point that out, when I read that, I was a little uncomfortable about a comment. You may wish to respond to that, but while I've still got the floor, please don't use acronyms unless you're going to comment on what the acronyms mean. I have searched the internet and I do not know what CCAF is, and I do not know what a PC is, but I can guess that PC is project completion. So just a comment, bear in mind that when we speak local government or financing all the time, we get comfortable with acronyms and we forget that not everybody actually knows what they mean. Yes. Yeah.
So to respond to that, I said I take on board the comments around acronyms, and we'll make sure the reports are adjusted to reflect that, and the full wordage is used in the appropriate manner. In terms of shareholder funds, obviously that's again set within the SOI, so we remove it if required. The asset value uplift generally reflects, I suppose, has reflected in the past requirements to actually grow business, which means generally growing the asset base that you hold rather than remaining static. So I think that was the original interpretation of that, was that we don't remain a static business, that we're constantly looking to grow the portfolio, therefore grow the asset base. You're right, we have an independent valuation each year conducted by Telfer Young, so it's not carried out by ourselves, and they will value the assets that we carry. Generally speaking, we're obviously looking to invest in development opportunities which does have asset growth, because if we don't generate asset growth, we are going to do further development. So it's a bit of a catch-22 for us, because we don't get capital injection from council. We're relying on growing our own balance sheet. So if we can't do that, we can't borrow and then do further developments. So hence the reason we've gone from 40 to 200 million. is because of being able to do precisely that. So it's just having strong investments, which we know we're getting a significant up because we're doing a development where we know we're adding significant value. So that's the rationale for that. The asset value, you are quite correct in terms of 1 year to another, we have a GFC will change. The one thing we have got is an incredibly diverse portfolio. So, for example, during COVID, when the tourism industry was hit, the marine industry was incredibly buoyant as everyone had boats, and we had the biggest bumper season ever, and we had a trapped clientele with international recreational boats. And so, you know, with airports, with housing, with economic development, with commercial development, we're right across a huge diverse array of businesses and industries and sectors of the market, which means, generally speaking, we've had pretty much 100% full portfolio, long-term leases, a lot of them in government, Ministry of Education, Ministry of Corrections, Ministry of Management and Environment, which are completely secure. And that gives you a strong certainty of income that you're not going to be hit in any significant way. So I can give the council a pretty solid undertaking. I've worked with a lot of portfolios. A lot of nationwide businesses would be pleased to have portfolio and the lease and security and income that we have as a business and the diversity we have as a business.
So it's a quick question. The revaluations also capture your development margins, correct?
Correct.
So that's an important part of a big portion of revaluation line will be the actual development margin and some of the profits from the development business, or the RSA development, for example.
That may well be the case, but it's not transparent. So we're increasing borrowing, we're increasing our asset base, but we're representing that as a growth in shareholder funds by relying solely upon uplift in valuation. And I'm uncomfortable with that because that's a very subjective measure.
Sorry. I don't see how it's transparent when it's put in their reports that they do these valuations and who they use. Like it's not in here, but it'll be in the financials. That's under following accounting principles. That's what they have to do.
Steve, do you want to respond to that? Yeah. Councillor McNally, given that you're a valuer in your past life, you may have some interesting comments to make.
Standard for most companies, but yeah, seeing those valuations would be interesting. The questions I had relate to pages 99 to 106, which all are marked commercial in confidence. Can we talk about them or not? Supplementary information, yeah.
Well, this was supplementary information which was entirely requested by council management, so it's information that they're comfortable sharing. That to guide.
So this is a public document. When I read that, I was wondering whether there was an issue.
Yeah. So no, this was a supplementary document that was attached for information purposes to give additional information over and above the quarterly report. So an additional breakdown indeed requested, and so that's why it's required.
Yeah, the questions relate to what's in the first part of the report anyway. So you talk about, you mentioned earlier on about your key or emerging risks, and you talked about the berry fruit company. Is that affecting your shareholding, or is it a rent stream that's the problem there?
So no, we have a 12% shareholding in the berry company, and if you recollect, the investment in there was made, and it wasn't a shareholder capital investment, it was actually the land was transferred into the shareholding, with obviously Ngāpu Asset Holding Company investing in the structures and then the employment to the operation of the business. So they funded obviously 88% of that, and that was obviously there to generate employment locally, local people, local residents, and to build that employment base. Because one of the reasons obviously we started the park was to diversify away from low-paid seasonal tourism jobs and create full-time opportunities for Kaikoura North. And that's why NACO invested significantly in the business, because from their point of view, it is simply creating jobs, then for them, that's creating full-time employment. That gets reinvested within the community. So that's the benefit to the business because you have full-time jobs. The business has had a couple of issues in terms of the strawberries, and that's been a nationwide impact. Last year, you've probably seen 70% of strawberries were lost due to the inclement weather, and therefore they couldn't grow the number of strawberry plants they intended to grow. So the intention was to do 10 hectares and have 100 employees. It ended up being 3 hectares and 35 to 40 employees. So it's been an impact as a result of a nationwide issue. So it's not something that's going to impact us. It's not going to ever generate a significant cash return. It was simply a matter of, because of that season, we had to underwrite the losses as a result of that 10 hectares not materialising.
Okay.
And
no, that's good. You also mentioned vacancies in some of your buildings, so that's obviously affecting your rent streams. Are any of your existing tenants in default?
So we've got no major. We've never had any major in arrears situations. We've only got actually. I mean, we talk about vacancies. The vacant buildings are literally counting my finger. So that's a lot for us. So in a portfolio of 80 odd buildings, 3 is pretty minor. But the fact we've got 3 is a first for us. So
yeah, I think the other thing is we might see more of that.
Yeah.
The impact that we do and close was starting to bite quite hard around the place. The other thing you talked about on mentioning coming on, so the community housing end of May, and there's some sales proceeds. Do they show up in your total borrowings? Sales proceeds already offset against this? You mentioned the maritime building process.
So maritime building has gone through, so that is reflected in that. So anything which is currently on the market isn't, because obviously until it crystallises.
Yeah, but it's used to reduce borrowings.
Used to reduce borrowings, correct?
Couldn't we use it for a massive contribution to the council?
That would be a conversation, because again, it relates to then if you
Dividends.
If you had a large dividend, this is a conversation I know which will no doubt come up. Then obviously it then restricts us on what we can do elsewhere. So that becomes just a bit of a right. Is it worth investing in this, or is it what do we have to effectively think out? So that no doubt will be a conversation in the future.
Okay, and the last question I had, bottom page 104, you've got the group's stated risk appetite does tolerate extreme risks and requires detailed management of high risks. And you've got that pretty table there. How many of your projects sit in the high risk red part of it?
0 projects are in the high risk. I mean, all the projects, I mean, the way that the board and management operate is a complete no risk. We will not undertake the development unless we know it's effectively, we've got it pre-funded, we've got it pre-leased or pre-sold, and we've got a fixed contract price for the contractor. And as you know, through PGF, we delivered, I think, 13 projects on time, on budget, with a 0% variation. So that's one thing, I'd say the team is exceptional at, is a no risk policy relating to any property.
Thank you.
Councillor Foy.
Thank you. Sorry, I'm just online. I'm just a bit sick, that's why I sound strange. Can you hear me?
Yes.
Great. And Councillor McNally has asked some of my questions. I think mainly on page 102, where it talks about additional information and segment results. Anyone that's done any property development knows that it takes a huge amount of capital and usually in a void of cash flow when doing large construction projects, which, housing projects, if you look at the number of projects we're doing there, and the increase, as noted in the report, that increased costs of construction projects. The page on 102 doesn't actually highlight the budgets and the forecasts within each quarter to show how the lumpy cash flows will be addressed for those construction projects. And I note that there's proposals there to sell property, but I think that's just really highlighting the cash flow issues with doing large construction projects. And if Whānau Holdings is going to do more, I think we'd need some more transparency around those cash flows and around those risks of the increased costs of construction. And further to that, Andy has highlighted the lack of granularity around which assets actually give us any return on investment or not, and which of those assets are more of a social good aspects, and he's highlighted the maritime and the airports. We don't have any granularity whatsoever around what those cash flows are or aren't, and how much public good or not we're getting out of Whānau Holdings for that cash flow that they're using up for that public good, and also the non-operating costs and the other costs. They're not transparent at all. There's just a little tiny sentence there on page 102. And when we look at the property maintenance and property management, that may be cost neutral. I'm not actually sure, if that's actually costing Whānau Holdings to have the entity. But I think there's opportunities between our council and Whānau Holdings to both do construction and delivery of infrastructure better, but we don't have that granularity or cash flow analysis at the moment. And I think there's opportunities when we fully understand what the assets are that Whānau Holdings has, and opportunities with our cash flow and their cash flow and our borrowing capacity and FNHL's lack of current borrowing capacity. Just to have that conversation, and I look forward to that. Did you have any comments on that, Andy?
Yes, I mean, the granularity is one we can address quite easily, and we will do in the next meeting, just so that everybody's got complete transparency on that. In terms of our cash flows, as I outlined previously, any project we have is obviously just going through its board decision and board recommendation and approval process. And as I outlined too, that we have to have funding in place, we have to have it completely de-risked, we have to have a commercial return, otherwise we can't raise the funding anyway. So each project has its own internal cash flow, which is effectively funded. It obviously has no impact on ratepayers or council because it's effectively freestanding. It has no impact in terms of us on the rest of the business because it's, like I said, effectively completely ring-fenced, and each project is treated as such. And as I mentioned previously, we've got very strong relationships with both the civil and construction contractors. So all of our projects are fixed price, and we are delivering to a budget. So our cash flows are generally pretty robust in their nature and delivered to that.
Good, thank you, Mr. Chair. Whānau Holdings, you must love that you not only have your own board you have to answer to, but also your board's boss, the council, that you get to and get all of these lovely questions from. More just generally, because you touched on the innovation and enterprise part, which we are also proud of. Are there any? My question's kind of around risk in that space with current tenants we have, given the drive from our new central government to see savings across all of its departments. You touched on there, the Department of Corrections now has a site there. Ministry of Ed through Te Pūkina, North Tech also have a building there. Those are rental incomes for us, but that's operational spend for those departments. Is there any risk around us losing any of those tenants, or are there any conversations where if I know sooner, then as mayor, can go and do a haka down in Wellington. But are there any concerns in that space around our current tenants and their ability or the sustainability of them operating out of Ngāwha?
Very good point. I'd say in terms of commercial risk, no, because obviously they're committed to long-term leases. So for the next 15 years, we've got a lease stream coming whether the building's empty or not. The point to me is we don't want an empty building. And I know what you're referring to in terms of corrections have gone through a restructure. Typically have gone through a restructure. There's still uncertainty as to what level of service they're going to get and how that's going to consolidate what the implications are for them. And so, yeah, we're more concerned in the space as to them either reducing the offering to our local community and it not being the big education campus that we wanted because they reduced the service and the offering to our young people. Or alternatively, corrections not activating the housing site as they originally intended, only using one of them or only having 10 inmates down there instead of 30 in each compound. So we are certainly constantly in that space trying to promote connections, even linking in other education providers to use their space. So we're always aware that while it's not our job, for the same reason you raised the question, we don't want to see them fail. So we're always looking into ways we can facilitate, help underpin a business by activating the space when they're not activating it. So I'd certainly encourage all councillors when they get that opportunity, in front of government or anybody else in terms of the education space, to ensure that we have that, have that space there and it's used rather than it being vacant. We don't want vacant space. We want it to have an offering of a variety of education and skill-based training activities permanently on offer and staff there to resource it. So yeah, I certainly encourage that conversation wherever you have it.
Thank you.
Any other comments from councillors before I wrap up and perhaps make a few comments myself? With valuations, the points are raised that it's economic, but it's also the amount of lettable space that is actually tenanted. And part of a developer's role is often as developing these and getting it fully let, and then often they will let those go as a fully tenanted building as attractive to property syndicates, etc., and taking some of the valuation off the table there, because if you keep borrowing to develop and you're not actually converting it to cash, your operating expenses just wander upwards. And there've been many development companies that I've seen that have ended up not taking stuff off the table to balance their books. And it's a bit of in this situation, we've got strategic assets which we are holding for the community that are not available to, and just having a clear understanding what the intentions are of other ones and how you don't just leverage upwards. You mentioned earlier that you're looking at your borrowing position, and probably a risk for the council with going through LGFA is considering that we are complying with Section 62 of the Local Government Act, particularly in how it's being structured and quite how we are handling that approach, which doesn't allow us as a local authority, given any guarantee, indemnity or security in respect of performance obligation by a council-controlled trading organisation. So we've got a wee bit of a legislative risk that is sitting around there that we'll need to carefully navigate and work out how it's playing out for us to do that via the alternative funding. And yes, our funding costs at the moment are probably about 5.5% at a guess, versus the 8.5% that you were there. So that is allowing, if we can do it, to allow us to take cash off the table in some way, shape or form. So just highlighting the risk to councillors that I think this committee should be interested in that as to how we're complying with the requirements in Section 62 on this process, because there has been some adverse media attention to this particular aspect in the past, and I have actually forwarded a copy of this to Jolie and Guy this article that was published December last year on this topic and getting good advice in this area. So essentially, I guess you're hearing that the councillors are looking to how can we get cash flow funding to be able to progress some of the many assets that the councils are obliged to provide for their community. I guess that's a challenge. So I think it's good that we've got excellent quarterly meetings starting to happen and continuing to happen. We're looking at all these challenges and starting to understand everyone's point of view along this, and that's probably going to require some compromises from the purist commercial side of Far North Holdings versus the public good aspects of and duties of the council, and have to explore those and have open dialogue, find a good middle ground. But I thank you for your comments and openness on where everything stands. I guess you're only a little over a month away from doing your annual report, and all of the information required will be put in the public arena, I guess, in about 3 months after that. It will be, I guess, slightly ahead of the council publishing their annual accounts. So thank you for your work.
Just on that though, doesn't our annual report have to take into account the CCOs as well?
We consolidate there.
Consolidate, but their report will actually have to be finished slightly ahead of ours on the basis so that the information's available. So, yeah,
End of September, we require.
our CE is indicating to me that he'd like to pass a couple of comments, and I'd welcome those.
Thank you. So I just want to make a few comments just as to the direction of travel and also to our governance and just progress, I think, in general with Far North Holdings. The governance meetings that have been held recently, I think we've added transparency there and better communications. We've also put in place and formalised a series of management meetings that will correspond with the quarterly reports. I think that will that addresses a number of issues, including the legislative risk that you alluded to, Graham, with regards to borrowings. We're very conscious of having one view of our group borrowings, i.e. both council's balance sheet and Far North Holdings. So we have good visibility over that and good inputs. We've also agreed to join forces with regards to comms. We can bring a good new dimension to Far North Holdings comms via our comms department. So I think that's very positive. Also, just for information and direction of travel, we have a workshop being set up for the end of May. In that workshop, we're going to be looking at pipeline. Essentially, we're going to be looking at a pipeline of projects for Far North Holdings, which will include potentially council assets that currently need to be or could be developed. That speaks to this asset characterisation, that this notion that's been raised that obviously there are some community assets and there are assets that could be used for commercial development. So we will be rationalising that, and that's a bigger effort that we're going to be making inside of council to understand our balance sheet better and the nature of the assets that we hold. So I think what will come out of that is a far closer working relationship with Far North Holdings and probably some form of strategy development or formulation that will be communicated in Q3 to this committee and to councillors. So I think there's an evolving game plan as we just get better at our communications and actually cooperation with our CCTO. In terms of Councillor McNally, question about dividends, there are discussions there about the future of dividends and the strategy for Far North Holdings. I think it's fair to say Far North Holdings historically has been in the business of retaining earnings and growing shareholders' funds. That may change, or the balance of that may change over time, but we will explore that as we start to identify the sort of forward pipeline of developments, how we fund those, and what the likely margins or development margins are to come from those. So that's all an evolving process at this time. But thank you everyone for your comments and questions.
Excellent. Just looking back to find the resolution. It should have been slightly better organised.
Maybe
Apologies.
if we haven't moved already, maybe.
What page are we on?
85, I'm happy to move, Mr. Chair.
Yes, we still need to move for a second.
I'll second.
And Kelly, thank you very much. And the motion is that the Te Miromiro Assurance Risk and Finance Committee receives the Far North Holdings Limited quarterly report for the quarter ended March 24. All those in favour?
Aye.
Against, if any? Carried. Thank you. And get on to your next meeting.
Yeah.
Cheers.
Please,
Oh, and thank you. Thank you. Good to see you guys.
Okay, moving forward, we've got Benny and Darren waiting online. Therefore, item 5.3 in the agenda to do with the audit plan, audit proposal letter and audit engagement letter. I'll hand the floor over to Benny and Darren. Thank you.
Thank you, Graham. What I might do is just before I start, I'll just get Darren to briefly introduce himself quickly. He's known to some members of the committee and management maybe, but not to everyone else. So Darren, do you just want to briefly tell the committee who you are and your role?
Yeah, sure. Hi all. I'm Darren. So I'm an associate director with the Deloitte team. My background is audit and audit quality. I'm originally from South Africa and I've came over to New Zealand in 2018 and just really looking to I really look forward to working with the team and meeting any other audit needs that you guys might have. You guys are really small on my screen at the moment, but do look forward to meeting some of you in person.
And the good thing is Darren's pretty close, lives in One Tree Point, so very well from a logistical perspective. Look, thanks, Darren. I'll move on to the report now. I'm not sure. So our report's been distributed, the audit plan. I'm not sure exactly what the page numbers are in your packs. But what I might do is I'll take it as read as I normally do. And perhaps I'll start on page 6.
28 is where the report starts.
Of our report, which is a slide that talks about the areas of audit focus. Now, just for everyone's benefit, the purpose of this report is just to set out a high-level plan of our audit approach for the June 2024 audit. So there's quite a number of elements to the audit. As you know, the annual report in itself is quite a lengthy document. We have a set of financial statements that they need to have full compliance of IFRS, essentially. Then you have a statement of service performance, funding impact statements, and a whole bunch of other information that goes in there that's subject to audit. So whilst we look at all of that to varying degrees as part of the audit, and we issue an audit opinion on the annual report, there's some areas that are mandatory focus areas under the rules that we need to focus, and or by nature are more material for various reasons. And those are the ones that we're really calling out on that audit areas of audit focus slide there. Well, I'll start at the top, unsurprisingly, because of the huge asset base that the client has and the council has, and the valuation methodologies that are required to be adopted in striking value for the financial statements each year. That's a significant audit area for us. So that's probably where we spent the bulk of our time because of the judgment that goes into that. That hasn't changed from prior years. That's just huge volumes of information, lots of valuation reports and lots of audit testing that goes into that. So that's why that is listed as an audit area of focus. Our approach to that, there's been no significant changes from previous years. We'll have to just do work through all the valuers, valuation reports, speak to the valuers and do all the key audit steps on that one. The next one, that's a mandatory area under the auditing rules. That's management's ability to override controls. What it actually goes to, it looks where we turn our minds to the possibility that a fraud could occur in the organization that affects the accounting, the annual report in one way, shape, or form. That's why it's listed as a significant risk linked to fraud. What we do in response to that is quite targeted testing, specific around looking at journal entries that go into the ERP system, look at certain aspects of internal control, look at certain any highly judgmental areas in the annual report or the financial statements, and we do testing around that to find indicators of things that need to be investigated further, or indicators of things that could potentially point to fraud. The next bit is revenue recognition. That is another mandatory area under the auditing standards. However, being a council, that's generally more aimed at a commercial or private sector business. So what we do on that, we rebut the assumption that there could be a fraudulent intent to misstate revenue. So we do testing around rates, more around the legal compliance, whatever, but we don't put that down. There's no particular fraud risk in the revenue recognition from an audit perspective. And then the last three is sort of the elements on top of the financial statements, outside of the IFRS financial statements, the statement of service performance. You're all familiar with that. So there's quite a bit of work that goes into testing how you report against your KPIs that go public and how you achieve them. ESG and climate change. Look, that is, you're not council's not a climate reporting entity under the XRB climate reporting disclosures that have come out recently. But we are required as auditors to think about, and so is council and management, when you prepare the financial statements, about whether there's, and valuations in particular, if any of the assets or anything on the balance sheet, for example, could be adversely affected materially by climate change going forward. So when you start to think about impairment valuations, those sorts of things, is that being thought about? Is it taken into consideration to the extent it's considered necessary? And then finally, that's the standard. We get a sector brief from the OAG each year on areas they'd like us to focus on. And those are set out further down in the report, but again, pretty similar to what it's been in the past. We look at probity and waste, sensitive expenditure. Have you followed OAG best practice or council's policies up to date in those regards? And then this year, yes, climate's a focus area, but also any stimulus funding that's from central government that's made its way through to council and how it's been spent. So quite a few things that we cover, but I'll pause there. That's the high level focus areas for us for this year. Any questions on that? Yeah.
Felicity, you've got your hand up.
Thank you, Mr. Chair. Thank you for that, Benny. I just had a question. You talked about the revaluations, and that's a big part of your job. I asked some questions about just one asset in particular recently. It's the old museum in Kaitaia. And I was surprised at how high the valuation was. And I wasn't actually sure when we'd done our valuations for our buildings recently. They'd valued that building at $1.8 million. And it's just like a standard stucco 200, 300 square meter residential looking building. It's nothing flash. So the valuation was extremely high, and the depreciation on it was extremely high at $43,000 a year. And I guess the question that I have for you, Benny, is in terms of the valuations that we have of the buildings, what does audit require about how often they're valued and actually the legitimacy of that valuation? So,
Sure.
you know, was that building valued 20 years ago or 30 years ago? And, you know, how did they come up with that number of $1.8 million and the 43,000 of depreciation for that? And the other question I have is, for the depreciation amount of $43,000, has that amount changed? Have we been charging $42,000 of depreciation on that building for 70 years. You know, what is the duration of that depreciation? So how does the audit look at that? Because I see that as a key risk for our assets, and actually is a key risk to cash flow for our ratepayers. And is that consistent with what other councils are doing? Because in the private sector, you need to look at the life of duration of that asset, and that's a very old building, and that's valued at that amount. So can you comment on that case study example from what you've seen in your experience?
Yeah, sure. So I'll there's a couple of questions in there, but I'll start off by saying the requirement to revalue isn't driven by audit, it's driven by the accounting standards. And the rules are basically you have to revalue with sufficient regularity to make sure that the carrying value on the books are not materially, the key word here, materially different from market value. So there's no hard and fast rule that says it has to be X number of years. Yes, you have a policy of at least 3 years. So in terms of commenting on that individual particular building, I can't do that right here. I don't know whether we necessarily looked at that individual building in that level of detail, because we are working with a materiality threshold for the financials as a whole, and in particular in asset, that number is quite high versus that value. But what should happen is the valuers would go in, have a good assessment of that building, and they'll apply a methodology. Typically, that will be the optimized depreciated replacement cost, being a public sector organization, which basically looks at what would it cost to actually reconstruct that building today. That's the methodology, and then the depreciation is based off that. And I'll also make an assessment of what is the remaining useful life of that building. If it's well maintained, it could be very long, and the depreciation or the useful life will be adjusted as necessary, because you're right, the depreciation for accounting purposes should be built on an estimated remaining useful life. So, and that methodology has been followed, and that is similar to what every other council has to do. But like I said, as far as that individual building is concerned, we don't look at each and every single building that goes into evaluation. We get each and every valuation report. We look at what the risks are and look at the material items or specific items on a sample basis, not everything 100% necessarily. That's in a nutshell the requirement. Yeah.
Thank you, Benny.
Thank you, Benny. I just had a supplementary question to that about depreciation schedules.
Yeah, sure.
If that's okay, Mr. Chair.
Yes, sure.
Thank you. Just for so for each asset, and for audit purposes, council should have a depreciation schedule that has accounts for however many years council has owned this building and the total depreciation collected for that tagged asset. And what happens if the depreciation that we've already collected is much higher than the value of that asset, and then we're continuing to collect depreciation if we've already collected that total value and more?
If I can perhaps step in there and say that you only depreciate as far as the value of the building, you don't go negative. But I think Charlie and Jonathan, as the people with their hands in and dirty on this, may be able to provide some comment on that.
Thank you, Mr. Chair. So in response to this particular asset, I believe the number that has been circulated for value is in relation to the insurance valuation. So that's reflective of what is on the books as the current replacement cost for that particular asset. And while that replacement cost is comparatively quite high, I understand there are additional circumstances with regard to a climate controlled museum facility at the back of that particular asset as well. Notwithstanding, Jonathan and I are kicking off a process of reviewing insurance policies across council's assets, where we will be looking at identifying themes to manage costs going forward, given insurance cost escalations that have been present across the country. So that's something we'll be looking at there.
Yeah, I was just going to say, point of order, that if we could just get back to the report and not hold up the orders, so we could focus on that. That certainly is an important discussion, so I'm happy with that being said, but that's something we should be dealing with internally.
Do agree with you, Councillor. So any other questions on the audit plan? And then we can move forward onto the next document that Benny and his team have provided. So on our pack on page 956, we have an audit engagement leader. Perhaps I'll just preempt that and say that I see a fair number of these, and having been a licensed auditor in my past, I have seen a large number of them and generated them. And this is all very vanilla. I don't think there's anything particularly that we need to focus on from point of view of the provision. The key points are probably on page 59, which comes up with the number called P. Is where people will focus and the analysis of the changes. And I think our Charlie, as our group manager of corporate services, I think has indicated that he might want to pass a few comments and then maybe allow Benny and his team to comment further.
Yep.
Thank you, Mr. Chair. Benny, thank you for providing this. The draft that has been tabled to the committee, I'd just like to highlight addressed to Janice, and I understand that you and Jonathan have revised that already.
Yeah.
In our initial audit of the audit engagement letter, that was one review point that we picked up.
Taking $2,000 off.
Yeah. Okay. Was that it, Johnny?
Yeah, thank you.
Yeah. Okay.
Councillor Court, you've got a question that you would throw in and
Just regarding the fees, that I did note that the fee is significantly down.
Yeah.
I did read the commentary on page 58 as to why last year's fees were significantly higher. And I just wanted to ask the question because we're really driving a tight LTP at the moment. So if the fees come in significantly higher than estimated in there, we need to know there's enough wiggle room to meet that. So a degree of confidence around the fees.
Yeah,
I think it's appropriate perhaps for Jonathan as leading the team to answer that one, and perhaps a touch back to the circumstances Jonathan inherited last year when he walked in the door.
Thank you, Mr. Chair. I think in terms of the cost increase, it is actually saying an increase from what the budgeted fees were, noting of course last year's fee was quite a bit higher than intended. There was additional audits that were carried out, as you may recall, as well as also some additional time that was spent on the audit through those two key pieces, as well as more senior audit staff being engaged on the audit itself. It did result in a higher degree of fees for last year's one. As far as planning forward, as far as budget is concerned, the proposed budgeted fee for 2024 is just within my guesstimate at the time of what the Deloitte fee would have been. So I think the 348 that's noted there is just within what I estimated the increase would be.
So there's no wiggle room.
There's not a lot of room. There's about $1,000 or so.
Yeah.
But that will basically drive something which, again, Charlie, myself, and also Guy is pretty tough on for this year, is that we need to make sure that we keep to our timing, that we execute as the agreed audit plan, so that we can maintain on time and on budget where we can. The addition I'd probably also mention is that there is a new standard that's actually an amendment to an existing standard that will see disclosure in and around potential overruns preemptively, so that if we are looking at going over in any shape or form, that's something that's actually going to be mandated as part of the legislation. That aside, Benny and I and the team have actually had a number of catch-ups and have all agreed, irrespective of legislative or not, it's something that we need to get better at as far as making sure that we've got good communication around any potential budget overrun to help mitigate and avoid that for this coming year.
Thank you.
Liam, okay.
Look, can I, that's good to know. This is one of those, kind of like what you call an unfunded mandate from central government, where we're required to have this, we don't get to choose, we get given a new auditor, and then you just swallow the extra cost that comes with that, and then you don't get the help. So this is the non-Deloitte in any way, shape or form. This is more on central government colleagues, recognising though the fact that audit is incredibly important. I just wanted to pick up on something. This might be something internal here or not, but whenever I have something addressed to me, I would very much appreciate seeing it or being CC'd in. And I checked my emails just quick to make sure it wasn't one of the 157 unread. And I checked the junk folder and it wasn't in there as well. And I haven't had any old school snail mail letters in my list. So if something's addressed to me, I would really appreciate whether that's an internal mechanism that needs to capture that. Seeing it before reading the agenda 2 days before the meeting. If my name is to something, just something, whether we capture that as an organisation or if Deloitte, if you're addressing it to me and sending that electronically, if that can please get CC directly to me as well, whenever my name is involved. Or for that matter, anything else in this room.
That should be happening internally. Because this is quite an administrative factor, but because of your role, you do it. I will be recommending a slight change to the recommendation to actually give the recommendation of this committee for you to actually sign on behalf of the council. I've also recognised the same point that's been raised. So I think that's probably something internally that we need to manage carefully. Have we got any? Yes, Kelly, sorry, I had you noted down. My apologies.
Just further to the question around fees. In our agenda, Carly, we've also got the timeline, the plan for the annual report. The audit that it speaks to is this very one that Deloitte will be doing. It's got a different cost in there. Is that cost in the paper at the end of the agenda? The cost in the in the next year, or I'm just reading it wrong?
Through the chair.
Sorry, I'm getting there, Graham.
Through the chair, the comment I think you're mentioning.
It's in the financial
It's on page 115. It mentions the LTT budgeted amount of 273, which is fractionally higher than the 268. The LTP is what I guessed at the time, is what the increase would probably be, based on conversations with Benny and also industry.
Yeah.
So one's a budgeted number, the other is what's come through in this proposed engagement.
The other question I have is in relation to the timeline that you discussed and the issues of why it, was delayed last year. The previous year we had delays due to water safety management plans or something. Are we confident that there's not going to be anything to delay us adopting our annual report this year before Christmas?
Polish off that crystal ball, Jonathan.
Because it'll be the first one in 3 years that we adopt before December. Yeah.
Through the chair, I think
In a long time.
through the chair, every effort will be made to ensure that we adopt at the end of October as planned. There will always be unforeseen. It's about making sure that we manage that the best that we can. But I think this year we have got the benefit of one, not having some of the water changes in legislation, of which created a lot of pain internally. I think it's more so just about making sure that we can execute any pre-work ahead of time to make sure that we can deliver to Deloitte and working with them as best we can to execute on time.
Thank you. And one final point, please, is the touch points for a chair of insurance, risk, audit, risk and finance. Will you be involved? Of course, yeah, awesome, thank you.
If I might just give some clarity that Jonathan and I have been having very regular conversations, and I also have conversations with Benny, and I might apologise that by the time I picked up your message was my disrupted travel day. Yes.
I figured it must have been something like that, Graham.
Yeah, thanks to Air New Zealand and a leaky window. Ended up having to drive up. Well, I've been working with Jonathan, and he inherited a number of issues which surfaced during the audit of accounts not being reconciled for considerable periods and all sorts of issues last year. And Jonathan, in its paper 5.8 on the agenda, has, which I insisted of being in there, is just really to highlight that we've made a hang of a lot of progress, and we are not expecting any shots out of left field or any issues. There will be one or two coming, but Benny and I, through this process, and Jonathan, and it will be Charlie now, will all be working very closely together to make sure that we hit straps, hit the deadline, and that we don't have overruns if it can possibly be avoided. There were some very specific one-off issues last year, which I do not expect to see a repeat of happening for various reasons. So, yeah, I've been taking a very close interest.
Awesome, thank you.
Yeah.
Thank you, Kelly, for the question.
Excuse me, through the chair, would you like me to show the recommendation on the screen so that we can give a
Yes.
Apologies, can I'd just like to make 2 comments on the fees. I think the hours in that table from last year tells the story, but I made the comment, my discussions with Jonathan and Charlie previously, there's some savings to be had here. I think those hours can be reduced. I won't hold myself to a number of hours that can be reduced, but council's legacy systems actually makes it quite difficult for us to do certain audit procedures that are quite easy to do in other councils. And that is because everything gets more complex, and we're moving towards a world where, you know, we employ quite smart digital tools and digital or data analytic forms of audit testing, which actually reduces the hours and drives efficiencies. But the system limitations don't allow us to always do that in all areas. So things that should be relatively straightforward and easy from an audit perspective are harder to do because of the legacy systems. If that can be addressed somehow, there's definitely going to be efficiency gains to be made.
Thanks, Benny. Look, I see a lot of firms' audit files in my other roles as quality control, external quality control reviewers, and certainly there's a wonderful saying, it's called GIGO, garbage in, garbage out. So if the quality of the things coming in can't be reconciled, can't be understood and proved to be accurate, it's not really valid to go and use some of the fancy tools that are about. And that was the situation last year, unfortunately.
Yeah.
Jonathan has assured me, and in his report at 5.8 assures everyone that they have done their absolute best to get on top of all of those issues. And their team has worked incredibly hard over the last year to address all these issues. So I'm personally quite confident that we've got a realistic budget, and that we're not going to find too many problems based on what I hear and the assurances that I've been getting from the finance team.
Yeah.
very much on the front foot managing stuff this year, whereas last year it was completely retroactive. Jonathan had just walked in the door and had to basically get everything back up to the required standard.
Yeah.
So on that basis, I have got the recommendation up here. If you might just be able to move it slightly on the screen there, just so that we don't have one of the lines on the joins on the screen sitting across in the wrong place. So I've suggested a slight modification to this, which reflects our mayor's comment, and that the committee receives the audit plan, audit proposal letter, engagement letter, and we recommend that the mayor accepts and signs on behalf of the council.
Yep. I'll second.
Is everyone happy with that amendment? Do I need to procedurally move that?
We do need a more just I second it.
Kelly, you're happy to move?
You moved it.
I moved it, sorry, you're happy to second? Okay, if we can get that back on the screen again, please, just then I'll place the motion. Thank you, as everyone can see that. So we moved and seconded. Do we have any further comment?
The comment I have is not so much on that, is that I'd be very keen to see, and that's really for Jonathan, to see us working with our system to make it easier and cheaper.
Yeah, Charlie. And look, I had a discussion, I can report, I had a discussion this morning with Charlie, and we were talking about reporting structures more generally, not just for the audit, but for us to be able to have a reporting structures that are better mapping the business model of the council. So I'll now, if there's no other discussion, I'll put the motion. All those in favour?
Aye.
Against, if any? Carried. Thank you to the team from Deloitte, Benny and Darren. Looking forward to having regular discussions with you and working and having a very smooth audit process this year, on time and budget.
Same here. Thank you, everyone. We'll dial off. Have a good day.
Thanks, Ollie.
Thank you.
Thank
Bye.
you.
Bye.
Moving back to our agenda at item 5.1, which is on page 15 of the agenda. We have Josh, you're in the room. And Charlie got involvement too, invite you to the table. And maybe if we can just speak through to your very brief report.
Yes. All right, so it's quite self-explanatory. It is an update to the board, the committee. It's just informing you that we are having a workshop after the assurance meeting. And an update on our CAMS risk software, the rollout of that. Can I do it?
He's muted now. Carry on.
Yeah, so the CAMS risk has been a rollout at council, and that's going well. We've got the risk framework, which is an iterative document, and I'm currently working on revising that to keep it current and relevant to what's happening in the industry.
And just for we're on public there, so just to inform anyone listening in, our workshop this afternoon is to take the top 15 to 20 risks that the SLT see for the organisation and give councils a chance to bring in their thoughts about what the significant risks and opportunities are for the council, and to get down to an agreed list of approximately 10 that we could really focus and do deep dives in future risk and assurance meetings of where to make sure we're on top of managing the risks for our highest risk items. The other ones will, of course, be all risk items will be a job for our CE and his team to manage, but just really giving good visibility to the very top ones. So the concept is just to narrow this down to a workable group for the top table governance group to work with. So that's essentially this afternoon's 2-hour session, is to quickly validate and add and decide a base type top 10 or so list that we wish to really focus on. Any other, Kelly?
And I know that everybody's heard this before, but just in case there are public that are going to watch this later, we did have a good, strong risk framework in place in the last triennium, but I don't know whether it was a realignment or what. Can't remember. Can you remember the research? It just all got, yeah. And so I do hope that despite us having a report to the public and to elected members, that there is some risk management going on in the organisation of what was, we spent 6 years on on managing those risks and having reports. So I would hope that that work is still happening within the organisation.
You raise a very good point. Revisiting what your top risks are is something that should happen at least annually, and if something comes out, it should revisit on the spot. So it is a continuous iterative process. This workshop is just to reconfirm where we are feeling the top risks are, that the governance top table ought to be really having themselves across, because there are hundreds of risks within any organisation that's doing anything. It's working out really what the key themes are that we want to be working on and having governance across. But in that, we were relying on our officials to be assuring us that the other risks are not being forgotten. And your point is very well raised, Councillor Stratford. It is a continuous iterative process.
Yeah.
Any other comments from councillors? Councillor Foy, I see you've got your hand up.
Thank you, Mr. Chair. Just on this risk matter, and I did raise a question earlier about our assets and insurance and depreciation and revaluations. I just wanted to raise a risk of the lack of transparency of the information through to elected members. And in particular for our very large assets. Our 3 waters and our is, a large asset, and we have quite a lot of information in our RAM data for our roads. But information around the housing for the elderly, I have requested the depreciation schedules for that asset, but that information wasn't provided to me from the previous GM of Finance. And I think in terms of risk, and the scale of the risk also needs to be assessed in terms of the asset base for our organisation and the value of that asset and the opportunities that we have as well, not just for cash flows, but also for our capital base.
Could I suggest that this is getting into detail level, which is appropriate for us to be discussing this afternoon in the workshop? So all excellent points that you're raising, but maybe that's part of when we get the framework out in the workshop this afternoon, is a good place that we can have the more detailed debate on which are the key risks and where are the key issues, and really fine tune down the information flows that are required. If that's okay.
Yes. No, happy to do that. But I think as well, there's been an assessment from local government and a local government level about always keeping information in workshops. So I think as long as the information is presented in a public forum to our ratepayers at a later time, that's all fine. But we really need to be having debates and discussions in a public forum as well, and be accountable to our ratepayers, because we're collecting a huge amount of depreciation from rates every year. And also Charlie's highlighted the risk around insurance. Thank you.
Yeah, no, valid points, and coming out of the workshop, there will be a direction through to the SLT team members and Guy and his team in general to come back to us with a finalised paper coming from the workshop, which will be dealt with in public agenda. So the outcomes will all come through at that point. Guy.
So, yeah, I'd just like to make a comment on this area in general, and Councillor Stratford's voiced a frustration that I share. And I think I voiced my displeasure actually in our first Choice Risk and Finance Committee meeting that I attended, which I think was July last year. We fell into a hole where there was no risk reporting. The old template had been dropped. I didn't think that was acceptable, and I'm not particularly happy with our progress to date in the past 12 months. We have a new GM of corporate services who I have tasked with coming up with a plan and with solutions rather than justifications from management as to why we haven't had progress. So Charlie, I don't know if you want to speak to that in terms of project plans. This actually applies to audit as well, but particularly in the risk space. What I'm concerned about is we're still finalising a framework a year on. What we actually need to do is finalise that and populate it, and then we need to make sure that our net of capturing risks and identifying them and reporting them is working well. So that's going to be a particular focus, and certainly an issue that's been identified with Charlie to provide us with some solutions.
Thank you, Guy. So absolutely, it's a key area of focus. Working through the risk framework. So as I understand, the risk framework in its current form was adopted in October 23 last year. It is an iterative document, which means as we go on the journey of developing our maturity framework and working through risk issues that are identified and building in mitigating controls and identifying ways to report to elected members on the mitigation and effectiveness of mitigation controls, that document will continue to evolve. At present, we're very early on in terms of the reboot of that framework. And it is something which has been highlighted to me that we need to make sure that we're streamlining the process. I'm working closely with Joshna, our risk and assurance specialist, to make sure that we have a easily understood and practical approach to identifying the steps required to build confidence in that framework and build it out through the organisation. Joshna is actively working through with teams currently to understand their businesses and understand the risks involved in their businesses, and then relying on the CAM software to provide comprehensive reporting in that space. What we will do is bolt on reporting up to governance in relation to the progress of that process, so that we have transparency on that for the work which is happening underneath and that's going on in the background. At the same time, we're going to take the output from the session today so that we have a top-down view in terms of the key areas of risk which governance wants focus on, and we will deliver reports on those risks where any areas are that we need to improve or strengths that we have in place, and report on that on a regular basis in conjunction with the bottom-up approach in terms of how we're continuing all of the other work in the background as well. It is going to be a project that will take some time, and to Chair's point earlier, even though we have a change in the framework for historical reasons in terms of the risk framework that has been in place and hasn't been reported on for some time, the controls are still going to be present within the organisation. What we're going to do is make sure that as we go through and evaluate those key risks, that we're adequately documenting and identifying and documenting those controls and building out a plan for maintaining assurance to report on those, the effectiveness of those controls in the future. So hopefully that outlines sort of some of the program of work that we have undertaken, and we'll report to this committee on an ongoing basis as to the progress of that.
I might just add to that we've also got a work plan which is I introduced early in my time and cross-referencing to our terms of reference and bring out and get, I've requested that for the next meeting, this is all fully updated, populated with future meeting dates, so everyone's got visibility about what items are going to be covered in which meeting. And included in this will be deep dives into the top 10 to know what is our maturity of managing the risks identified, and we'll look at doing probably 2 to 3 areas in each meeting and spending 15 minutes on each one of those areas in detail, so that we are constantly going into the top 10, the top items identified by the governance team, and the councillors, so that you can have assurance that we know where we stand on these items and what progress is being made on these high risk areas. So that's part of this maturity profile. It's been facilitated really with Charlie coming on board and having a bit of extra oversight resource to allow and steer and direct this to happen. So I'm not sure whether all councillors got a copy of this particular document I have in front of me, which is in blue and a draft plan, but that's where it was a year ago. It was about my first or second meeting that I got this put in place, and this is going to absolutely drive the work of this committee. So everyone can, we're going to say what we're going to do, and then we're going to monitor it to make sure that we do what we say. Any further comments on that particular item? Okay, the motion is on page 15 of the pack that the Miromiro Assurance Risk Finance Committee receives the risk update report May 2024. Do I have a mover? Kelly, you're happy to move that way? John, second. No further discussion. All those in favour say aye. Against, Fanny? Carried. Moving on to the next item, which is our health, safety and wellbeing report. And Ian, is Ian with us today? Yes, you are. Sorry, you're hiding behind the chair. Come to the table so we can all have a good conversation in this very important area.
Picking up on safety, it's freezing.
It's okay for us South Islanders.
Lou's got it sorted,
Oh, yeah, sorry.
but it is that, shoes that we see. Okay.
Aircon's bipolar.
It might be limiting the Toru that we're about to have, because we all shiver.
Keeps you on your toes.
Keeps you on your toes.
Not when it was hot that time though, I nearly fainted.
Someone had put it up to 28.
Yeah, could I hilarity aside on about our room temperature, but perhaps if I can ask you to speak through and guide us through the key points in your report and allow councillors perhaps to ask questions in due course. Should we just take this as read, Ian? Are you happy with that?
Yeah.
Any points you wish to highlight?
I think maybe, following on from the risk conversation that you were having just now, we are managing the health and safety risk in the same sort of way. And table 2 on page 3 really designed to highlight the 6 critical risks that we're focusing on and here, and what we're currently got in place and what work we're doing to reduce those risks until I'm comfortable that we've reduced those risks as much as we can. They're going to remain with us, 6 main areas, basically. So table 2 listed, we've got contact range,
Sorry.
loan working, driving, site inspection, psychosocial hazards,
behaviour, there are top 6 risks. So I think if you've got any questions,
Questions? Oh, lots.
Ellie, perhaps your first and next.
I was going to raise the 3G, but that's happening next year, eh?
Say again, sorry.
The 3G, is it? Oh, no, not, yeah, that's
Yes.
2025 next
Yeah,
year.
so the 3G.
It's out the window.
Some of it being discontinued even this year. So it's going to have a big effect on our lone worker.
Yeah.
So you've got lone working listed
So
as
it's
a critical business.
In one.
Yeah. We're in a real interesting moment in time because we've got very poor mobile coverage up there still. It's getting better than it's still poor. And so our lone workers system is set up so that we can communicate through satellite, so we don't need mobile reception. So we've got all this gear installed in our various vehicles that do exactly that. But I think unbeknown when that project went through to now is that they work on 3G, and it's not a case of just changing the SIM card or updating the software. The supplier has told me, if you want to continue using this gear, you've got to buy new gear and use 4G. And I'm thinking, in the meantime, Vodafone is working on Starlink to give us total coverage. And the only reason we've got all this satellite gear is because we don't have the coverage. So at some point towards the end of this year, and they're saying definitely by the end of next year, we're going to have the coverage, which means that the reality is our lone worker coverage will be satisfied through using an app on your phone. So, and at some point in the next couple of months, you need to have a robust conversation about what's acceptable to the organisation around our lone worker devices. Hopefully you look at this change of technology that's coming and the fact that in reality we're going to be able to use our phone. So,
Are you working with our Nothing But Net guy in the organisation? Pom, yeah.
to a degree, yeah.
Okay.
Yeah.
I just wanted to signal the loss of 3G as a risk for our entire district as well. Not, it's definitely a risk for our staff, but hopefully the Nothing But Net person is, got something underway, because there's so many places in our district where 3G doesn't work, or 4G. I've also got some questions for Guy in relation to health and safety, because in Ian's report, he's included some attachments that you've signed. And they are the leadership and worker participation, and what you say about health and safety policy, and the leadership and commitment and wellbeing policies. So I wanted to just inquire, have you seen the health and safety management system or reports from the health guy? Has he been shown the health and safety management system that's mentioned in the policy? Or does he receive reports from you?
So yes, so SLT received a monthly report from me called the SLT Health, Safety and Wellbeing Report. But it's slightly different from the ARF report. It's similar in some ways, but the ARF report is very risk focused, and I'm trying to provide reality and reassurance to elected members on how we're progressing in our maturity, whereas the SLT report focuses on slightly wider range of topics.
So the responsibility under the legislation doesn't sit with SRT, it sits with Guy. How confident should we be that you're aware of the risks that Ian is escalating to SRT?
I'm confident that SLT are getting good reports. I haven't sat down with Ian and dived into the bones of the workings of the system. Perhaps we should talk about doing that. I'm very open to continually upgrading my knowledge and awareness, health and safety, both the actual nuts and bolts of the risks we're running and the health and safety issues, but also in terms of council liabilities, what our obligations are. So obviously this first report that I signed is essentially a statement of intent.
Yeah. Yep, so that's why I'm asking inquisitive questions to see if, you know, what's said in the policy is actually happening.
I like to think that I have maintained a focus on the health and safety department and been supportive by our health and safety people in promoting their mission and continually doing that in meetings, both staff meetings, leadership meetings and SLT meetings.
And then for the wellbeing one, just quickly, what is the process for employees to seek help or report wellbeing concerns?
So People Safe is our incident management system, but it's also used for reporting on wellbeing issues. So that would be, clearly it's different from reporting a health and safety incident than reporting a wellbeing issue, because if you have an accident at work, something happens, then you put your name to it and your time and place and location, etc., etc. That's that. Whereas a well-being concern, that may not, People Safe may not be the right way to record it. Because it's such a sensitive personal subject. Really, what we need to do as a team is to make sure the organisation are very clear on what support facilities we offer and what the various routes are available to access those support. That support, like EAP, is really the main one because they are the trained professionals who are going to bring counselling sessions for you if you're brave enough to make that call. And then we have a group of wellbeing advocates within council who are trained to be a sort of go-between that hopefully would be considered approachable, depending on what your relationship is with your manager or your team leader, that kind of thing. So we do have the facilities available, and it's just sort of encouraging people to make use of them when they can.
Also in your report, you talk about the red flag system.
Yeah.
And at our last meeting, we had one incident. An incident happened out here and the person the member of the public has identified herself as the red flag.
Yes.
And I understand that we have a VADE model of, dealing with complaints or people that need dealing with. When, if the VADE, if somebody's red flagged, how can we incorporate a VADE model of dealing with a customer? Well,
so we
want to protect the staff member, but still provide customer service to customers.
Just maybe the process quickly is if you generally field officers who encounter these people, so they would log a People Safe incident. Say I was responding to RFS ... doing a dog visit or compliance inspection, and this happened. So that's the report that goes to People Safe. And in that report, they would say, as a result of this incident, I recommend a red flag, a self-warning flag is put against the person in this property. That comes to me. I make an assessment of it as well. And then when I'm reviewing the People Safe report, People Safe has the ability to allocate tasks to staff members. So I would then allocate tasks to the team leader of that team. Say, had a request for a staff warning flag by so-and-so against a property in your team. Can you have that conversation with the team member and get back to me with your recommendation? And if so, then we would create a staff warning flag pathways. And then, so that's how the staff warning flag is created. And then we have a risk assessment for site visits anyway. And the risk assessment highlights what hazards you might be, i.e. threatening behaviour that you might encounter. And then a control of that will be before you go out, check the staff warnings, check that property to see if there's a staff warning flag and see what the advice on that flag is. I.e., do I just need to go twos up or do I need to take a police accompaniment with me, that kind of thing? That's your question.
Sort of, because it's in relation to a number of people that I am dealing with who've had, you know, either verbally on the phone or face-to-face altercations with staff, and then they've now can't get any service. So they're ratepayers, and because they've had a verbal or nearly physical altercation, there's now no service. I don't think that's acceptable, but I feel like there's something missing in our organisation to manage. So we've got to manage the staff. We also need to manage safety of staff, but we also need to ensure that we're still providing service and, you know, conversation with them.
I actually think this conversation goes beyond just the health and safety conversation, really. Because in many ways, you know, I provide the structure to keep our guys safe and the processes for it.
Yeah.
And then at no point in my staff warning flag process or my risk assessment does it say if Joe Bloggs is giving you grief and you can't go on your own, then we cut them off. You know, so that isn't part of my process.
Thank you.
Yeah, my process is approach with caution or take the policeman with you.
Cool. Thank you, Ian. Thanks, Grant.
Any other questions?
I was a bit concerned about how many threatening behaviour ones on the screen in your report. And my question is, do we report these to the police?
When necessary, yes.
Do you think we can start reporting that in your report? So, for example, we talk about the fake gun and the BB gun.
Yep.
I don't know that actually need to be onboarded to the police.
Yeah. So that particular one, there was 2 teenagers came with a BB gun. That was reported to the police, but once it had been dealt with. So when that occurred, conversation was held about how best to deal with that scenario, and it was felt by the staff at Yahoo that calling the police and saying there's a teenager here with a BB gun is going to cause an overwhelming response that perhaps is not appropriate at that moment. So it was a decision, there was an assessment and a decision that was made by the staff there at the time.
Look, I'm happy to leave that with you. You're the subject expert. I'm not.
Yeah.
But I find it alarming.
Yeah.
What I consider a social escalation of threatening, bullying, and intimidating behaviour.
I agree.
So I just wanted to say, if we are reporting to the police, can we just let us know in that report? And just the other one, the customer from the cruise ship that fell down the stairs in the library, you've got that reported as a near miss. Is that correct? I think that's actually an accident. I get the top fish for proving that I read the whole.
I agree with that.
Thank you.
Thank you.
Thank you, councillor Ford. Just to note in the comments that there's been a couple of notes up there that I draw people's attention to. Perhaps wrapping this up, being on 4 or 5 other council audit and risk committees, the list that you have here with contract management, loan working, driving, site inspections, psychosocial and threatening behaviour is very common top risks. So I think you're identifying the same risks as other councils that I'm involved in are identifying. Key one to me and the escalation is this threatening behaviour situation coming in. It wasn't there prior to COVID, and we're getting a lot of issues coming, and we're getting a lot of people who are being placed under enormous stress. From that, we're going to be seeing far more stress as the flow through from the economic downturn comes through. And there's going to be a lot more reasonable people that are finding themselves in situations that were not necessarily their making. And it's going to make reasonable people do potentially unreasonable things. And I think we've just got to be very aware as an organisation dealing with these to be sensitive to those situations and find ways that we can de-escalate and provide services in a way that's not going to endanger our people. But picking up on that, but this list is just about, I could photocopy this and any of the other councils I'm involved in. So it's it's not just this council's issue. It's actually it's a societal situation that I'm seeing. If there are no other comments, we'll perhaps move to the recommendation, which is on page 17, that the Miromiro Assurance Risk and Finance Committee receives the Health and Safety and Wellbeing Report. Steve, you like me to move in that direction? John, you're happy to second that? Any further discussion? I'll place the motion. All those in favour say aye. Against, any? Carried. Moving on to 5.4, our revenue recovery report. Thank you. Come and join us wherever you feel comfortable sitting. For everyone in the agenda, we're at page 74, if I can read across correctly. Are there any points you particularly want us to focus on? Clearly, Councillor Court's read the papers right the way through. I'm assuming everyone else has.
There are a few points that I do want to point out, and first one is the general title rates arrears that has been decreased by 30% and the water rates decreased by 40% since the 1st of July 2023. With that, the final demand has been issued for mortgage demand on to 2 of our 3 banks that we've issued mortgage demand on. The third one will be completed next week. We are trying to push it out before the end of May, so then that way we have June for those banks to pay, so they fall within this financial year. Also, since the report, all the financial assessments that have been lodged with the courts through Law North have all been submitted, and there have been quite a few good outcomes regarding those financial assessments. Also to note, the multi-freehold land rates and water debt, I know is a very hot topic at the moment. So the decrease has only been 2% since the start of the rating year, but the water rates has been reduced by 14%. With that, revenue recovery have been working really hard with our current ratepayers that are contacting the team to push through Section 90 with the Whenua Māori Amendment Act, should they meet that criteria. Also with that, there was also a working group that has been set up towards how we can reduce the multi-freehold land debt with our current policies, the policies that are looking at being reviewed, and with the Rating Act as well.
Moving on to the sundry debtors, the sundry debt has decreased since the start of the year. As you will see from the prior report, the building debt and the resource consent debt has been reduced. Revenue recovery have been working really well with both the teams, how we can reduce that outstanding debt. And the collaboration, especially with the resource consents team, has been really effective, and they've been very proactive in helping in any way they can to reduce that debt. We are also now offering the payment arrangements to that debt that is 90+ days over. We've been pushing the payment arrangements to help those customers to try and make smaller payments instead of making a big bulk payment as well with that. We've also brought the environmental health team on board to work with revenue recovery, which will help reduce the licensing, the alcohol licensing, the food business licensing as well, to try and reduce that age debt. With that as well, I do believe that the environmental health team have also updated their invoices to state that if payment is not made for a food business license, that license will be cancelled. So which will help encourage them to pay as well. I believe those are the biggest points I have.
Councillor Stratford.
And just on the resource consents, there's no way that somebody that gets the credit because we don't process within the statutory period can then get into the schedule, can they? No, because they would pay the invoice on time to qualify for that.
Chair. With that, it is a complicated question. It is something that I know the resource consents team, with now being having a lot more resources in that team, are looking at that as well. With our collaboration with them, they have been reviewing those that have been completed within that time frame and receiving that credit. Of course, it is a very long list, so it is definitely a work in progress.
I've been doing this every Assurance Risk and Finance Committee since I got onto council 4 years ago. And this is comment on the Māori freehold land rates. Now, this is no slight on anyone in particular, but I am unhappy with the continued lack of information being provided about the plans we have to address the significant amount of debt we have on our books. I know there are plans in place, but at our last Te Kuaka, our Māori committee meeting, we had Scott May in the hot seat like you are today.
Yep.
Today we have you. At that meeting, I made it very clear that while I appreciate these verbal updates we get, I expect to be able to see that in writing in the reports that we and break it down. And so I know that there's a cross-party alliance. That's how I always want our council as an organisation to work. But I want to be able to see it. Seeing is believing. Be able to read it. Be able to say, cool, we've got this working group. These are the amounts of meetings we've had, or we've had none. Okay, so what's happened? Or across that, we've identified 1,254 accounts. Of those 1,254 accounts, we've analysed them, or just, being able to spell it out there, because when we've got for our general titles, we get, an entire page of just bullet points. And then for Māori freehold land rates and water debts, we've got 2 lines. And I appreciate the verbal updates that we get, but we need to have that in writing with the plan very clear, with the update of where we're at, how the working group is getting on, what you have identified, what's going to get put forward to our CEO for write-off, what isn't and why not, and everything like that, everything in between. And I know that guy will be able to do that. But at that meeting with Scott, I was like, loved it, had a catch up with him after, need to be able to see it and read it in a report. Same thing again today when I see this on.
Can I comment just quickly? So I'm anticipating that CEO's discretion, there will be a very large write-off coming. I want to make sure that the process to get to that conclusion is bulletproof and transparent, because it will be looked at by auditors, etc. So that's why there has been this process. I'm confident there's a working group that's been formed. I know from last time you heard about this was from Scott, but we're going to ask Charlie to comment on this one, because we have a project management framework we applied here, and I think we're on track, and that we get some, they can tell us about the outputs that we're going to get.
Just quickly, I know you're on track. I want to read it in a report.
Okay.
All right. Just making it clear, I want to see the breakdown. It's a normal report for me, for other elected members, and for the public to be able to see how this council is addressing this outstanding debt that we will never collect for the most part.
Thank you, Mayor Moko. So by way of verbal update, there is a work stream which is currently underway. Zena's leading the charge on that one, and we'll be able to speak to any details that you would like to understand now. The objective of that work stream is to have a written report to the committee meeting on the 27th of June.
And so that's Te Kuaka committee.
Yep. As that was the committee which presented where Scott spoke to that requirement, and where we've tabled that. So at the following one, we'll present the report on a status update there. As you've mentioned, it's going to be like across the organisation. So in terms of the feedback that we're going to be deriving out of that report as well, we will be beefing up the reporting that we do as a part of Zena's regular report, and we'll be looking across how we can reduce the risk of the same situation occurring with the arrears in the future, but also reviewing, providing feedback into the timeliness of the review for policies that we have in place as well. And then we also have the Te Hono team who will be making sure that the community engagement component of that is presenting options to the committee to make sure that the next steps of how we not only do the work inside the organisation, but how that's communicated out is considered as a part of that program.
Thank you. And can I just say that across, I always say this, overwhelm us with information, and you know, then you're less likely to get clear. I know there's this work stream going on. Do you know what other work streams have been going on in this council since I've been in here? Probably since Ed's been in here. Trying to get, what do you call it? Development contributions policy over the line. Seeing our housing for the elderly portfolio divested. Work streams that have just going on and on for years. And then it's kind of like, yes, it's happening, but how do I know? I can only know if I read it and then have physical proof to show if, you know, someone else comes on to take it this mahi on, hey, guess what, look at this. Verbal updates aren't going to cut it for me anymore. So.
Yeah.
Before I move to the two remote questions that we have up on screen, just saying that look, we've got a total across all areas. This year we've got at the moment $21 million worth of outstanding, 20 million last year. What to me is also important is to hear that we're working through to make sure that these numbers are correct, that we're recognising all the commissions and rebates that any ratepayer is entitled to, whether it be on general award, priority award, and that we've actually got good data in here, because coming from this, our finance team for the annual audit is going to need to consider impairments and their assessment, and the auditors have indicated that they will be looking closely in this area. So getting all this work stream progressed is has been set out by Guy and Charlie is important. And at this point on, let's move on to, we have a question from councillor Helgard Harawira, followed by councillor Foy.
Ai, kia ora tātou. I tautoko the kōrero about Māori land rates, and I still query why since November we've been asking for updates and why this hasn't been progressed, given it's in the local government and the Rating Act. I don't see the same sort of endeavour going into all the other unrated acts, unrated lands, be it church or other bits and pieces. There's about 20 categories of unrateable lands, non-rateable lands. So that's one thing. I do worry that you know, we've forever been, I would say as a Māori Ward Council, I feel fobbed off often that there has to be transparency, we've got to do this. I do worry that the LTP plan is going to be confirmed on the 26th of June and Te Kuaka meets on the 27th of June, which means that we will have no influence at all on the next LTP plan about how Māori land rates should be legitimately written off for people who have been deceased, unused land, landlocked land, etc., etc. So that's all I've got to say. I think it's just really long, laborious, and people may say transparency, but I don't kind of really believe that. That's all. Kia ora.
Thank you. Councillor Foy.
Thank you, Mr. Chair. Just on the a further supplementary question about the resource consents debt. And thank you for Zane and her team for their work on this, because I can see it's the largest debt on page 78, particularly the debts at 90 plus days. And it's good to hear they're getting resources around there. I was just asking maybe for our next audit risk and finance meeting, if we could have the resource consents team to come and give that explanation, because in the long-term plan savings options, the new management of the resource consents department, the management has detailed they're going to save $750,000, so $750,000 by a change in the methodology for incomes and cash flows for that department. And the general manager of that department wasn't able to answer in detail the questions either. So I know that Zine is not a planner or not a management of that department. So can I just ask that for our next meeting that that detailed information is provided to us so that we can understand?
That's been noted. I'm sure, Guy, you've noted that, and Charlie, and you'll give that into consideration. Charlie, I think you had some comments were you going to raise?
Thank you, Mr. Chair. Just in relation to Hilda's comment, we will demonstrate progress on the matter. So apologies for the historical balances which have accumulated. It is worth noting that the write-offs under the Act are at the discretion of the CE, and in order to manage risks and satisfy our auditors, we just must go through the process, and we must have firm and substantial reasons that we're executing that. So we look forward to presenting the report and managing that as we go through. Thank you.
I just want to ask about the general title rates and water arrears comparison and the water on page 76. And I do acknowledge that the dollar value has dropped, but it looks like the number of accounts has risen. Am I reading that correctly?
And so we're looking at, is that footnote 8.1?
I'm looking at it, it looks like that.
Okay, yep.
Okay, so if I look at the very first box, third quarter report 23-24 general title rates, and I make the comparison to 22-23, I can see that the dollar amount is, oh, now I'm confusing myself. It actually looks like it's risen. And the number of accounts has gone from 1555 to 1653, if I'm reading that correct. So while the dollar amount appears to be dropping, the number of people in trouble seems to be rising. Am I reading that right?
Through the chair. So with the third quarter report 2023 to 24, the number in the rates total, if you look at the overall total, has increased compared to where we were last year.
Yeah.
And so has the number of accounts. Going through, there are some years that we are lower than the prior year. We do the whole overall number of the accounts to show that, but I'm more than happy to have a look at what you're looking at and explain it to you in more detail.
I just wondered if this indicated that more ratepayers were facing financial hardship. Because while the debt recovery numbers not good, the balance has decreased by 30% for general title and 45% for water. It actually looked to me, reading this, that more people, the dollar value might be less, but more people were suffering financial hardship.
From the previous 2 meetings ago, with revenue recovery doing the calling to customers that missed instalment 1 and 2, just to get that data to feedback to Miromiro, that there seems to be a lot more people financially struggling out there, and also, of course, with the increase in rates, valuations this year as well. People are definitely feeling the pinch with the cost of living as well.
My apologies, Mr. Chairman, I will continue online, but I do need to leave to get to my next appointment. But I'll join the workshop.
Well, thank you. So, bringing this matter to a close, I guess my key concerns, and I think it's been mirrored around the table, is making sure that we have good data, that everyone that's entitled to a rebate or remission under whichever role or for whatever reason, that we have those identified, and that we are working to, I guess, working with our ratepayers, but to get also the funding coming in, because we can, as a council, there's a lot of services and projects we could get going if we had $20 billion in the hand. But we need to recognise also the where we're at from the point of view of the economy. So there's clearly some work that's being undertaken. It was really good to hear that you're working on the Maori land and making sure that all the land has been appropriately identified, and that will be work in progress. We won't actually get to the end of that because it's just going to be refining over a long period of time. What's happening. So thank you very much, Zena. I'd like to move the recommendation, which is on page 74. That the Miromiro Assurance Risk and Finance Committee received the revenue recovery 31 March 2024. Councillor McNally, are you having to second that? Second. Thank you. Any further comment? All those in favour say aye. Against, if any. We've now been here for 135 minutes. I'm advised that lunch break.
How many seconds?
And well, actually, if I look at the clock, maybe 133 and a half minutes. I propose to adjourn the meeting with a return at, say, 12:45. We'll need to work through relatively quickly the remaining items in order to be ready for the workshop we previously discussed at 2 p.m.
Thank you.
Thank you. We are quick, aren't we? All those in favour? Against, if any? Carried. Okay, the next one we've got, next two reports are Jonathan's. Reports, and they are 4.7 on page 107 and page 113 year-end planning update. In my view, we probably covered 5.8, the planning update, pretty closely when we had the auditors with us. And so perhaps if there's anything in particular you want to highlight on those two reports, we'll deal with 5.7 first.
All right, so 5.7 on page 107 just provides financial summary through to 31st March. Due to the agenda timing, we did narrow and miss out on the April results. The one point I'd also just draw to attention is that we went through a realignment in and around that time. I think finalised in around end of March. And as such, it did require a bit of rework around a more detailed quarterly report that that we would normally actually bring to this meeting. Moving forward, once we rejig the design of that report, we'll look at bringing that more detailed report back to this forum. In lieu of that, we just wanted to ensure that we do maintain a financial update in due course, so that we can obviously keep that pushing along. I'd further just reiterate that Charlie and I have been looking into a number of the reporting framework that we issue across organisations through to council level and across the organisation as well. And one of the aspects that we will be looking at is that more detailed quarterly report to ensure that it's fit for purpose, taking into account any feedback and aspects that come through, particularly from this committee, so that we can make sure that we get that report checked up right, fit for purpose moving forward. Turning to the actual report itself, again, no huge surprises from seen in previous months, with again continuation of a surplus of around 21 million against the planned budget of 19.4. Again, breaking that into its components, income is slightly up. Again, mostly like previously reported, around central government subsidies and other income. It's worth noting though that within the central government subsidies, part of the increase that we're seeing there is due to budget phasing, where a good chunk of the actual subsidy itself is actually being put in the final month of the year, which makes it look a little bit better than what it is. What we will see as we progress into that final month of June is that we'll see a wee bit of a catch up, because all the budget's sitting in there rather than being phased appropriately through the year. That's just one point I just wanted to draw out. The other income notes as per on page 107, just some of the components around the operational grants that we've received, things such as DIA, better funding, etc. If you take those two components out, which are, I guess, one, phasing impacted, and two, hard to budget from an operational grant standpoint, the rest of the revenue actually tracks pretty well bang on the budget, which is quite a good guess, I have to say. From an operation expenditure side of things, being the other key component, again, we've got the opposite occurring. We've got some higher degree of spending. When you drill into that in a bit more detail, which is on page 108, it notes in particular around the contract and professional fees being higher than what our budget is. Again, similar to what we saw with the central government subsidies, we have a phasing issue, particularly for roading, where again, they've put all of their budget for this in the final month, which again creates a bit of an artificial aspect that comes through there. So again, with that contract of professional fees, which is tracking well above budget at the moment, we will see a bit of a catch up on that once we get into the journey space. It's probably worth also just highlighting as part of an organisational piece, the team is currently going through a reforecast and consolidating that to see how we expect to land for the year end and how we can manage through a number of different moving parts. One of the big ones that's been brought to our attention is the Department of Water space. There is a site budget overrun which we are currently working through to understand what unders across 3 waters and ourselves we can use to help offset and mitigate that overspend. But again, as soon as we get more information to hand around the granularity of that, we'll be bringing that back to this committee. Other points just to briefly note, again, slightly higher costs that we're seeing in general expenses, really insurance driven, which is a point that Charlie mentioned before. We're seeing premiums increase year on year, and that's actually starting to hurt from an expense standpoint, which is why we're kicking off a wee bit of a review to understand different policies, the premiums, claims history, etc., so that we can make sure that what we have from an insurance standpoint is fit for purpose. Once we've conducted that review, and Aon, our insurance broker, is coming up in June to help conduct that and sit with us and work with us through that process. Once we've got more information to hand on that, we'll be bringing that back as an update through to this committee also. Rate remissions slightly higher than budget, but again, last point in the year around some offsets, big payroll related savings in there because of the large number of vacancies that we've been carrying, particularly at the start of this financial year. Outside of that, I'll take the report largely as read, unless there's any particular questions.
Possible to report going like in future, so that professional fees, like for a consultant, is separated out from contractors, because contract works is easily explained, but I think professional fees is always, a consultant doing something here, there, and everywhere. That's the one that I find as an elected member we need to analyse in line with how much each department is spending. That's what I want to understand.
So, I think it was the last ERC, we would workshop this and get reporting that everyone was happy with. Jonathan, is that in the diary now? The workshop for financial reporting?
Not as yet. It's planned for early July. We will look at conducting a workshop that's going to touch on a number of finance aspects, as well as some previous ideas that have been brought forth on this committee and council around topics such as reserves, depreciation, revaluation. But then also, I think, Charlie, you were also looking at having a fresh take on our reporting structure and strategy on how we do that, because I've got some ideas that I'd like to bring to the table, as well as how we can, I guess, move with the times and shift forward to ensure that this SLT and all key layers down to budget manager make sure that they're receiving what they need in order to manage their shop, take ownership and accountability, and drive their business as they should.
Councillor Foy.
Thank you. So thank you for the report, Jonathan. For the information provided, Councillor Stripp has already asked one of my questions. It was about the delineation between contractor fees, which are clearly outlined for an intended purpose, and the professional fees bucket of money. I'm not actually sure what the bucket of money for professional fees is as a budget, or who has the discretion to decide which department gets which professional fees and how that's resulting in what the end outputs will be. So I look forward to having a workshop on that and also looking at that as a separate bucket of money for the LTP in terms of our budgeting, because Councillor Stratford is correct. It's clearly different and clearly a discretionary fund compared to a must-have for our contractors. For the other matter that I had to bring up was the carry forwards, and I'll continue to bring this up every meeting until we get it right. So on page 108, it highlights the capital expenditure for the year continuing. However, what it does not delineate is the difference between last year's carry forwards and how we're tracking on that, and as a separate bucket of money, a separate budget, to the new works that are being undertaken this year. And it's great that they're saying that it continues in terms of a dollar value, but that actually doesn't give us any granularity about the key projects that have been delivered for that. And there are some key matters that haven't been delivered that our elected members expected, like underroading, for example, the Motuti slip. We all thought that was happening. There was budget there, and unfortunately, the staff used their discretion to not choose to do that project, and we weren't at all informed about it. So the reporting in this financial summary is really important for us to know if projects are being completed or not. And saying a dollar value doesn't give us that degree of certainty. It's actually the projects that are being delivered, although you're saying here that money's been spent. And in terms of the operational income and the operational expenditure, it's good that it highlights the interest costs. And I've already brought it up today about the amount of money that we collect for depreciation. And it's good as well that we're talking about the amount of money for insurance, because they're two key overheads for our council that are significant cost to the ratepayers. And it's really great that we're going to have a workshop on that in July, but that does not give me any comfort that this long-term plan budget, we will be missing out on those financial savings by not having those discussions earlier about how we could do things differently. I would like to see that being reported separately so that we have that clear oversight as to how much money we're collecting from rates for those two items, and it's also probably reflective of our risk as well as an organisation. It's great as well, you talked about, Jonathan, the revaluations. That was a key point I brought up this morning. So a timeline around that would be great. And also knowing the scope of that, because we have a lot of assets. So that's not a work stream that can happen automatically, but there needs to be a pipeline of that to ensure that we're in compliance with that regular revaluations that the auditors talked about. So if there's any comments on those matters, that would be helpful. Thank you.
Through the chair, no, thank you all for those comments. I've taken a few notes on there. As far as the contractor professional fees, we can definitely break that out in future reporting, just as a note in there. So the 12 million that's noted year to date, the 50.45 million that's noted in there year to date. If I look at the professional fees component of that, there's a number that we can break down quite easily within there. There's a number of lines in there as well, which we can give some more granularity, which I'm happy to send around as well. Further to that, in regards to the capital report on page 108, 111. Again, we can also, I believe I've seen the carry forward aspect and I can actually factor it into this report as well. So that moving forward, you can see the components between budget as well as the carry forward component. So that's something that I can also build in for future as well. Good point on the interest related costs as well. That is something that is starting to bite. When I look at year-on-year comparisons across where we are from a cash flow perspective, we are seeing almost, well, practically double the amount of interest costs that we were about a year ago. And that's just a product of the interest rate environment doubling itself. Again, that's becoming increasingly important as we balance or forecast forward for our cash flow balances. It's something that I know that Zena and Transaction Services and Rhonda are looking at closely on a weekly and at times daily basis. So again, that is a key component that's coming through, and we are seeing those higher costs biting on our cash flow. As regards to rates, collections and revaluations, I can touch a bit more on the revaluations in the next report. And again, we can happy to discuss in more detail around the rates, collections aspects in the upcoming workshop.
Any other questions from councillors, or Charlie, you've got a comment?
Through the chair. I think this is all really valuable feedback. So we appreciate that. I'll field emails or any other suggestions in terms of workshop matters that you think would be useful. We're collating a list, and like Jonathan mentioned, you're going to see a different format report next time. And we will definitely run through the use and purpose of the report and any other sort of topical matters that you think you would like to see covered off in a workshop setting.
Sorry, Mr. Chair, just to clarify a supplementary question. Sorry, the revaluations that you're referring to are the revaluations of the QV rating. Is that correct? That you're referring to, not the revaluations of council's buildings and assets for insurance and depreciation purposes? Sorry, what do you mean when you say revaluations?
Through the chair.
In the last paper.
In the last paper, we touch on the upcoming financial audit and the revaluations of our different asset classes. So I can touch on that in a little bit more detail then, if you like.
Oh, the revaluation from QV for the asset classes.
And yes, that's correct.
Sorry, my question was about valuations for council's assets for both insurance and depreciation purposes, because the only valuations that I've seen for council's buildings are the ones from Housing for the Elderly portfolio, and I'm not sure how up to date we are with our valuations of our council-owned buildings and assets for accounting purposes.
I think firstly, this is covered off in the next paper with the revaluation plan for the council's assets for the year-end accounts. Is that can we deal with it there? Is that the right place?
Yeah, the next 5.8 has got the planning updates for that. Yes,
it's got the schedule and the plans.
But the context of the workshop referred to was about the matter in 5.8.
Yeah, there's a schedule in 5.8 of the planned revaluation, so that's of the council's assets. So I think questions on that we could probably deal with under that heading.
I'll wait for them. Thank you.
I guess if there's no other comments, just a few thoughts I have is in your reporting is getting a level of reporting by perhaps transport, Three Waters, and getting that building up to the consolidated view. So we get to see where, for instance, the contractor and professional fees is being included and get better visibility so that we're looking at it of each of our key areas And then we have the overhead sections coming off the bottom, if you like, so we can build across with getting an idea of how we spend it. And capital expenditure should actually be separately analysed as said that are we on track for that? Are we delivering? Do we have, and getting early visibility of any overruns that are coming and having reporting up, so that there is no surprises coming to the top table, that it's been well signalled. John, you've got a comment before I put the motion?
Yeah, just very quickly, just on exactly that, like not seeing me here, and I'm hoping to actually see how long in advance we do that is our commitment to the ratepayers, especially some of the big items we actually have them tracking in terms of risk, are they going to be delivered or under delivered and on time. But I expect that will be some report that we'll see coming through on a regular basis as well. We can put that in email if you wish.
I cannot say. Some of the things that are going to be workshopped in July are things that elected members did want before adopting LTP this year. So I just signal that to you by my cause issues for adoption. That's all.
Okay. You don't want to comment at this point?
Sure I can.
You
You reserve the right.
Okay, we'll move forward and leave that one sitting on the table. We have a resolution here. The Te Miromiro Assurance Risk and Finance Committee received the report. Yes, FNDC Financial Summary 2024. I have someone's move, Kelly, or have
Yep.
both? John, thank you. All those in favour?
Aye.
Against, any? Carried. Moving on to 5.8, which is a paper I asked to be placed after the difficulties that we had last year that Jonathan came in and valiantly solved for us eventually. But I wanted to comfort for the elected members that we're not having a repeat. We've already had quite a conversation on that with Benny earlier and the audit team. And but if there's anything additional on that, I'll just highlight on page 114. We have a list of the assets, whether they're going to be revalued at the end of this year, and predominantly the areas that are not being revalued are eroding, stormwater, and some of our public toilets, swimming pools, and those items. Accounting standards, as Benny suggested, is that we have to revalue them if we perceive there have been material changes in the values. And normally what the accounting team do is they go and get some indexing since the last valuation and then assess and make a call as to whether those areas should be revalued, because it's quite a cost to get it done. And I think it's a good call to have your three waters assets revalued, because we're going to need that information for the DIA and working out where things are heading. So having those in cycle is, I think, particularly appropriate. But if there's any other comments, Jonathan, you wish to raise, and then take questions from councillors.
Yes, through the chair, just following on from your comments again, just as part of this planning and making sure that we did have a solid plan in place, it was around just that proactive communication and meeting with the auditors to basically do a post-mortem, what worked well, what didn't work so well, what are the focus areas, so that we're really clear up leading into this audit, just so that we're all on the same page. Again, we touched on aspects of anything around recent changes and accounting standards and those sorts of things. So we go in eyes wide open. It's worth noting that there isn't anything material as far as changes are. There's a minor change to an existing standard. They will see, I think, a small change on disclosure of audit fees on note 5 of the report. Otherwise, it then focused on our valuations and such. And with those, as noted at the top of page 114, We typically look at a cyclical basis where we don't value the entirety of all of the asset classes in 1 year. That being said, we do take a carrying value review and assessment from an external valuers to indicate if there is a material change in value that would otherwise trigger a revaluation, which has happened in the past. We've had them, and actually has worked both ways. We've had valuers come back through and say, look, there hasn't been enough of a movement that would necessitate a revaluation here. Hold off until next year. Here's our assessment, and this is our rationale. Likewise, we've seen it move the other way, where they have indicated that they're within a certain asset class. It has had material movement. They have requested a valuation. So this schedule that we've got here is kind of like a default listing of what our initial plan is, but it does change based on the external feedback that we receive from the valuers. I think that's the key component from there. The last page just touches on the timeline, which just indicates when Deloitte will look to commence their interim audit, which will be in and around June, July. And again, their final audit commence in and around the end of August. As noted by Final Holdings, they're about a month before us. So all things going well, they get all of their audited results through to us for consolidation, going through until adoption, which at this stage is planned for the 30th of October.
Questions for councillors? Yes. Councillor Foy, I see that you've got your hand up. And then me. Then John. Felicity, did you want to join us? Your microphone's muted.
Are you there?
Yes.
Sorry. Can you hear me? Sorry, I was trying to take it off mute. And thanks for this paper here. My question is about the last valuation dates. It says the most recent ones, but I don't know the previous valuation dates before that. And I guess it was one of the matters brought up from the audit about getting that right. So Jonathan's had to do a bit of catch up in this area since our last CFO left. So each of these classes here that have had the revaluations, they will have a depreciation schedule linked to each of those assets to show how much money is taken out of the general rate per asset each year. And then instead of the money actually being collected in a bucket of money to the side for that asset, we use that money to pay off our debt as a council. Is that what other councils do? That's a question, I guess, to our staff and also to our chair, who's on a number of other councils, and how depreciation funding is managed and administered with our council compared to what other councils do. And also the transparency of that information, because it's great to get this paper, and on page 1 we'll have a timeline for that, but it has been a formal request from both myself as an elected member and from the community boards to get these valuation reports and to get the depreciation schedules for the assets that we manage through delegated authority, and we were just flat ignored from staff. So I guess that's a question to staff as well about getting the information about. I particularly asked about the halls and the hall costs and the housing for the elderly costs for the evaluations and depreciation schedules. So thank you. Those are my questions.
I might respond based that this council is no different to the other councils in the way that it handles it. Coming from the revaluations, accounting standards say that we must depreciate based on the revalued asset value and allocate that across the remaining economic life. Depreciation should be funded, so yes, it causes us to accumulate cash, the concept is by the end of that, we've repaid down the debt. If we borrow to get the asset, or we've got sufficient cash to be able to replace the asset when it's there. If we don't get this right, effectively what we're doing is charging our children and our grandchildren for this. So section 100 of, well, section 109, I think it is, says that we've got to produce general purpose financial statements complying with generally accepted accounting practice. Section 100 says that we must have a balanced budget, which isn't just saying that our income and expenditure match. The sense of this section is that we must fully account for the costs of providing the services to our community for the year. And that includes the using up of assets. We shouldn't be kicking the can down the road by fooling ourselves that by deferring maintenance that we can balance a budget, because that only passes the problem on to the next year or the year after, or our children and our grandchildren. So it's being honest about getting this all done. The revaluation process here is perfectly valid. You don't spend the money to revalue every year. You do need to make sure that we're not far enough out that it's giving misleading information. So as far as the community boards and everyone getting right down to the granularity of individual assets, we do run the risk here of governance getting in, stepping back into management territory, and it should be noses in and fingers out, is one of my sayings. So we should
Just
be
to
asking.
respond on that, we have no idea about how much it costs to own a building, because
Can I please finish, and then I'll give you a reply reminding you that you're not actually a formal member of this committee, and I've been generous enough to grant you unlimited speaking rights. But we need to make sure that we are getting the divide right, and we as governors should be making sure the process is right and not getting down into the absolute granularity. And so we've got to be a bit careful that we don't get so buried in the forest that we can't see the trees. So those would be my sort of comments, and I'll now allow you to perhaps raise your other points.
And yeah, and I think it's a relevant question about how much information is the right level of information. So I think that that's a valid point. But I think having no information whatsoever on how much it costs to own a council building and how much it's costing the ratepayer is actually a flaw in governance, and is actually negligence in my view. And I think that as governors and people who set a budget, in order to set the budget, we need to know how much it's costing. And so that's the query about why we need to know how much the operational costs and the depreciation costs, etc., of a building is, because there are many opportunities for a building when you have an asset or when you own land, but you can't actually balance the opportunity cost without knowing the background numbers. And I think it's correct that that we come to a conclusion about what is the balance, about how much information is correct, or else there's no point in having this committee if we're not going to be given information about finance in the audit, risk and finance committee, or even to those governing those assets and delegated authority, or else the staff will be making all the decisions about finance, and there's no point having elected members. So I would push back about what's the optimum level of information to know how to govern something, or in the case of the community board, having no information at all.
Order, Chair, this paper is speaking to the work plan. It's not speaking to information that elected members should be getting. It's irrelevant to what she's talking about. We need to move on.
Yeah, I'll move on, Kelly. Goodbye.
So just my comment.
What?
You were about to do the same.
Just on just answering Mr. Chair. I think it's moving on. I was next to the list. Just answering this. Funny you should mention some of the things you did, Mr. Chair, because I was looking at this and saying, really, I'm not interested in so much what the valuation is, but that we are doing the valuations according to what the rules are. So So it's good that we've got that there. We can see what actually where any holes are. So I'm happy about that. But hand in hand with this is the asset management, because I think you mentioned, Jonathan, that a trigger point when you do something like maybe you change a pump, that may trigger a revaluation of that asset. But I'd expect that to be BAU. Know that you're actually doing that. So good that you're doing that. But I'll really be keen, and I know it's not this report and risk being sort of pulled up, but to actually see our asset management being delivered. I understand we may be going to a cloud solution with Step 1, and they do have asset tools inside of there, so that might be something you can look at. But that's my comment. So thank you for the report. I'll be keen to see the other aspects of that governance oversight that those other things have been done, such as asset management.
Just before I perhaps give Jonathan a chance to reply, you've got a question, but is it on the same topic? No. Or should we let Jonathan?
These through the chair, just a quick additional point there. I noted that for the asset classes, we go through a rotation basis. There is an exception there for roading. We generally, for most of the material roading, given the sheer size and materiality, even a small 1% movement can be material. So we generally do revalue that asset class each and every year. And to your point, John, rightly so. I mean, around having an asset management system would give us a degree of data and management ability that would enhance the ways in which we do things currently. Because at the moment, when you look at the revaluation, when a valuer goes out to a building, they don't just look at that building, they actually break it into its components, maybe 4 or 5 different components, from roof to fit out, structure, foundation, and they value each component, pass that back to Holly, our asset manager, and that feeds into our data as far as what the value of that asset is, what the depreciated replacement cost is, that's remaining for life, and then we calculate depreciation from it. But that's, when you're breaking it down, it becomes quite difficult. An asset management system would make that so much more cleaner and simpler.
Quickly, usually the annual report comes to us before it goes to council. Is that factored into?
I haven't got that written down and highlighted.
I'm just your mind reader.
All right, sales aren't over. We had Steve.
I just note in that list of things to be valued, there's a couple of things that have been valued already recently. One is the housing for elderly. But what I want to focus on was, if we're looking at the water assets, we afford plan of what we're doing there, because, and I understand part of that's already been done for a finance assistance application. We are a committee, aren't we?
No.
So I want to know what the feedback we were going to get relating to some of those water assets. Will they be in the state of them, basically, what's required for an update, or is it just as they are?
The valuations are in as at the date, the condition that they are in.
So it's as is. So we're having the idea of what the upgrade might require. Is that relates to a question I had. Something I don't see in this, if we're looking at forward planning, what are our carry forwards? And it relates to the previous item. There was
I think Jonathan's indicated that he's going to pick that up, and it's probably something that was more related to the previous paper. And I think, am I correct in hearing what you said, that you're going to CapEx, look at the carry forwards plus this year's budgets broken down by projects and where we're all at and what likely carry forwards there will be on CapEx, because one of the things that I'm sensing in this is that we're not delivering. But that goes back to the previous paper, so I'll give myself a point of order on that and not continue.
Yeah, but it does. If we're looking at forward planning, then we have to account.
Yes, we do.
Particularly quickly in relation to the LTP deliberations we're about to head into. So we need to understand, because it's back to what's the words, affordable and deliverable, really. So we've got to be able to,
Yes.
so we've got to be able to achieve what we're trying to do. But if we carry forward 30 or 40 grand of capital budget and we're trying to do another 100, suddenly you've got 140 grand. How do we do it? So we need a better, make sure that the completion of the capital projects, and I do get that it's on a 3-year budget, so some of these will take a few years to do, but it's got to be, it's a forward plan.
Well, we need to keep an eye on.
No, I'm not, I'm talking about this, because if you talk about the water assets in here, we need to know exactly where they are, what we need to do, particularly if you look at roading, drainage and bridges, we know we've got to replace a heap of bridges. What's the plan?
Yeah.
And at the moment, we don't have one.
The valid point you've made, slightly off the topic, but is that we need to have a really solid asset management plan and system. Moving on, pick up the point that our Deputy Mayor had, must have read my papers, that we are going to need to schedule in here an ARC meeting. And I'm suggesting it's probably somewhere between the 30th of, around about the 30th of September, because, well, between 30th and the 7th probably of October, because we're looking at Deloitte providing verbal clearance. But if there's any issues that need to be resolved, we need to have that on a timely basis. So, Jonathan, you're the controller of this planning. I suggest you liaise with the governance team and myself as to a suitable date for that meeting. It's pretty key. So, because this committee needs to recommend to council that they adopt the annual report. And yes, there might need to be a special video meeting just right up against it if there are changes at the end of any matter, but we normally would consider a full annual report, which will be a page by page turn. Any? Before I post the motion forward.
Okay, so Jonathan, thank you for providing this project management framework. I think this is invaluable for us to have the ability to review and track this project. I really want its annual report out on time this year and everything finalised. We just straight off topic onto various things, including asset management systems. I'm just going to say, Charlie, thank you for bringing this project management framework to many of our kaupapa. Asset management is going to be one of them. So you're going to see a lot of things now where there will be project plans and we will be working to timeframes. Hopefully that's going to deliver more information to councillors and also speed up our processes. So just a couple of things with regards to this process. One is please continue to just build up a really good, transparent and constructive relationship with Deloitte. I think that's really important for our auditors. And the second one is maybe incorporated into your critical path to consult with the Mayor and the CE on the actual CE and Mayor's report. So last year we didn't have that much input into it. It was just delivered and we asked for sign off. I think, Michael, I think we should be putting a lot more into that in terms of
more ownership, for exactly the two of us across these critical documents.
Correct.
Okay.
Thank you, John.
Item 5.8, recommendation that the Miromiro Assurance Risk and Finance Committee receive the report North District Council year-end planning update. So Steve, you'll move, Kelly, you'll second. Had a good discussion. All those in favour say aye. It's been carried. Then we'll go to the lucky last, which is a motion to move in public excluded. We'll note that the items to be covered off are the Far North District Council current legal action, potential liabilities claims. This will be permanently restricted from public view for reason of legal privilege. And we will then confirm the previous public excluded minutes within the public excluded section. I expect this to be very short. To the point, but do I have someone to move the motion set out on page 122? John, Kelly, any further discussion? All those in favour say aye. Against, if any? Carried. We'll now cease the public stream. If you can confirm to us, please, Blue, when that's ceased to be there, and we'll make sure that no one's on all that should be. Okay, given the nature from a point of view of staff members present.
If you read inside.
Recording has started.
Okay, thank you, everyone. We're back in public meeting. There's been no other business. I will ask Deputy Mayor Stratford to give a closing karakia.
Kia tau, kia tātou katoa, te ata whaia tō tātou araki o ihu karaiti me te aroha o te atua me te pipinga tahitanga ki te wairua tapu. Aki aki, āmeni.
Amen.
Thank you, everyone. We'll see you again in July.
Yes.
Now we have our.
We've got a workshop now, which everyone here should be continuing in working hard.
Yeah.